Yeah, and now that China is cracking down on mining, we could see the switch to renewables for mining Bitcoin accelerate. And so that obviously would also be good. And I think what you're referencing to when you talk about renewable energy generation and combining it with Bitcoin mining, that is, are you referring to the Arc Square paper that they put out, talking about how the economics of that could make, renewables stronger?
I haven't actually read their work. I think they talk about it as maybe like in the home or something, but I'm not sure. This is just from first principles thinking as an engineer. And seeing I used to be a renewables geek too, so I did a lot of the calculations.
You, me, and Chris Bernisky.
yeah, Chris too. Yeah, but I have done the calculations,
Okay. One other thing that I wanted to ask you too about who was selling at the time was, Willy, I think you had also, it was tweeted or you wrote about this in your newsletter, that you also saw some institutional selling. Can you talk about that a little bit more?
Yeah, there was we saw, I wouldn't say institutional, I'd say, technically they were whale selling, holders of over 1,000 Bitcoins. So that's either very, very large holders that are personal and private or institutional. But their holdings dropped, and they were dropping slightly before the crash. And so, yeah, that dropped. And unlike, normally what we see is what we have seen in past months is whenever the institutions or whales dropped their holdings, the next tier below, which is like 100 to 1,000 Bitcoins in holdings, they would gain almost a mirror image, and they were soaking up those coins. And in this case, the next tier below, the what we call the dolphins and sharks, they were pretty steady, and so all of those coins that were being unloaded by the whales just had to be absorbed by the smaller buyers, which they couldn't maintain the price at that point, and so yeah. Despite the interesting thing was that as this whole thing started to cave and the price dropped, and crypto Twitter, the world was going, oh, Bitcoin's going into a bear market. We don't see 50% drops like this without like a bear market. That was completely different. That view was completely different on chain. We saw a whole lot of new entrants come in for the very first time to buy their Bitcoins, and holders of one Bitcoin or less. So, $50,000, $30,000 investment. Those numbers started skyrocketing, and so smaller players came in to buy that dip, and so the actual user count on the network increased as this thing was selling down. And it's just that the buying power by a sea of smaller retail was not sufficient to counteract the sell-off coming from whales.
And Raphael Glassnode recently wrote a blog post also talking about a potential slowing in institutional demand. How are you all determining that?
Yeah, so what we see is, one is maybe the institutional products, right? The GBTC, the ETFs that have been trading at a discount for quite a bit now, which they seem to recover slowly. We'll see how that plays out within the next couple of weeks and months. But what we saw is that going into the end of 2020 and early 21, we saw this huge, unprecedented spike of number of whales in the network on chain, right? And that started cooling off, in February, even in March. So that kind of shows that distribution of potential, institutional or whale buying into smaller hands. And I think ultimately, this led to what Willy says. Although we see this huge entrance of new network participants, right? Of new users coming into the network. They were simply not able to sustain the price because just because of the buying power as compared to this institutional rise or whale rise that we saw towards the end of the year and beginning of this year.
And I also, you guys parse out the chain metrics in so many different ways. And I know both of you have also seen some trends when it comes to the movement to and from exchanges. What are you seeing there, and what does it say about where the market is headed?
Yeah, I think so what we saw, the trend that we started seeing since essentially a bit over a year, since Black Thursday, was this general depletion of supply and exchanges, and so that of course leads to some sort of liquidity squeeze. There's not enough essentially to be bought up, and so this reduces substantially the selling pressure. With the rise to new all-time highs, and before and now after and during this drop, we've seen we saw some increased supply on exchanges, right? That is now cooling off again, and so these coin movements really tell you a story about investor behavior on chain, and the liquidity and potential sell pressure that you see there. It's a bit more nuanced than people usually put it, because it really depends on the exchange, and we've seen recently this sort of like this geographical difference between increasing supply on Asian exchanges, decreasing supply on US exchanges, right? So there might be some geographical things in play as well. But generally, you can see this recent cool off that that it seems like investors are essentially done with the sell off.
Well, actually, in order to kind of paint a broader picture, the three exchanges that you were talking about that are picking up coins are Binance, Bitfinex, and Bittrex. Is Bittrex? I thought that was an American exchange, or
I don't want to get ahead of myself here, but I thought, or at least that they were operating there, maybe. But I don't want to get ahead of myself.
I'm pretty sure it's American. I'm pretty sure it's American.
Is it?
But it's not a very large by volume exchange.
It's not. The
main, the big 800-pound gorilla is Binance, and that's interesting, because I'm seeing even in the chart analysis and looking at the way in which the price action is analyzed. The selling comes from Binance and the buying comes from Coinbase, and there's a net shift in coins. And I don't know if it's some intricate arbitrage thing that's happening, or whether or not it is actually Chinese. The Chinese selling their coins, and now that we've seen they're banning mining, I don't know what's causing that, but it definitely looks like the West is buying and the East is divesting.
So I don't remember what the exact wording was in the blog post where it talked about that, but I feel like it hinted at people essentially trying to move their coins offshore, maybe to avoid certain regulation or something. So
capital flight.
But Willy, you feel like it's simply that Asians are or the Asian market is selling, and that the Western market is buying.
I'm just guessing at theories. I have no real information. I'd probably have to, figure out what's really happening in the industry by talking to people, rather than just looking at the sheer numbers on charts. But yeah, and back to this point of the supply on these exchanges. But the interesting thing for me is that we've been in an era with such strong institutional and high net worth buying that on-chain has become very dominant in the first half of this year. Because those guys move their coins off the exchanges and put it into cold storage. But now we're in this phase where retail's really ramping up and they're coming in to buy this dip. And typically the second half of these, 1 in year bull markets that, go crazy vertical, the tail end of it is very, very dominated by retail.